Hey everybody, happy Monday. I hope you're ready to have a great week. I am back to talk a little bit about our Phoenix metro housing market and what has changed since last week. So first I'm going to start talking about the market index, which is what I tend to lead with every week. The market index is measuring our supply and demand in the market and taking into consideration a lot of other factors. This week we are at about 351, so we've increased once again. As a reminder, a reading between 100 and 110 is a balanced market, and anything above 110 is a seller's market. So we have gone further in the direction of a seller's market, which is not surprising. That has been the trend for quite a while now. But what's interesting is that often, or most of the time, what I've been discussing is our supply is super low, and that's what's really made an impact on us being in a seller's market. And what we've been seeing a lot of lately is supply has been pretty stable, but our demand has risen. So there's more demand from buyers, which is putting more pressure on our market and in turn getting us into more of a seller's market. Our buyer demand is about 27% above normal right now, and that has increased quite a bit over the last 1 to 2 months. So that's a big factor in seeing us go further into a seller's market. One thing I wanted to talk about this week is rental rates. I don't talk too much about that. I usually focus on property values and appreciation and that type of thing, but rental rates have been interesting lately. They have really increased quite a bit when you compare year over year. Last year at this time, our rental rates were about 14% higher than we were last year at this time. And when you look at the median lease price, we're sitting at about $130 higher per month for median lease price. So thinking about that from two perspectives, if you are renting a house right now or an apartment or condo, you might want to consider looking at buying, because the price that you're paying in rent must have gone up quite a bit or will be going up, and it might be more affordable to actually purchase a home and have a mortgage than it is to rent. Second, if you are looking for an investment property, it might be a good idea to look at a property that you could put a long-term renter in, because these rental rates are so high. So assuming you get a good price for the property, you may be able to cash flow quite a bit more this year than you would have last year as these rental rates increase. So something to think about on the rental front. And then finally, just a few more quick stats. So we have 32% more homes under contract last year. We have 32% more homes under contract now than we did this time last year. That's what I was trying to say. So it's, another indication of us kind of having a record year with lots of homes sold this year. 2020 has been just crazy. In addition, our contract ratio is 168. What that means is that for every 100 homes that are available and active for sale, we have 168 that are actually under contract already. So that kind of illustrates, again, the challenge that buyers are seeing. Only 100 available with 168 already under contract. It can be a bit discouraging and challenging as a buyer. We also have a median days on market of 8 days on market, so still staying in the single digits as we have for the last few months. It's a very quick sale. And then also in terms of the number of homes that have sold over the asking price, we're sitting at about 34% for October. Although we're very shortly into October at this point, that's where we're sitting so far. So 34% of closed sales closed over the asking price. So hopefully that information is helpful. I know it is a ton, as I do every week, but try to keep it to some important statistics that hopefully help you in your home buying or selling journey. If you have any questions, feel free to reach out anytime. I'm happy to help, and I hope everyone has a great week.